Advertising budgets in North America are expected to shrink this year in light of a projected recession or economic slowdown. But a Canadian ad tech company expects its revenues to grow thanks to its AI-driven product. Acuity Ads says its flagship platform, illumin, backed by AI, helps advertisers follow their customers from the point of engagement all the way to conversion, maximizing the return on investment for their marketing dollars. Joining us is Tal Hayek, CEO and co-founder of Acuity Ads. Thanks so much for coming in. We appreciate it.
Thanks for having me.
I wonder if you could just tell us a little bit about illumin. And now I'm saying it right. I think I said it wrong.
Yeah.
I tried. I really did. So it's like illumin. Can you tell us a bit about how it works and how AI helps you to achieve what you want to achieve with this?
Yes, so absolutely. So today, illumin works on what's called programmatic advertising system out there, which is the process of buying and selling digital ad units billions of times a day through an auction-based system. So because it's so many transactions, it has to be AI. And the job of the AI is to deliver positive ROI to advertisers. So that's really the job of, let's say, the programmatic system. And what's unique about illumin is that it solves two big major problems that we have in the programmatic space. Problem number one is marketers really like to think about running ad campaigns as a journey. So we call it journey advertising, where they split their campaign up to different segments. It starts with the awareness piece, goes to engagement piece, and then to the conversion piece. And it's very important to send different messages along the way. The problem with programmatic, it uses AI as a black box, and it always sends the same message over and over again, kind of starting to annoy the consumers. So it becomes less efficient as if you tell it as a story.
This is like the same ad popping up over and over again?
Sure, yeah. Everybody always gets annoyed by those same ads popping up. And the reason is because of that black box. So that's the first problem that we're solving, is we're allowing the advertiser to really create a consumer journey, set it up in stages, and deliver it to the consumers in a calculated kind of way, kind of moving them along that journey.
So what would that experience be like from the consumer's perspective then?
Imagine, a company that you don't know or a product that you don't know. Then you get introduced to it by, let's say, a TV ad. So it could be a programmatic TV ad on a connected TV or on your computer. And you would see that ad maybe 3 or 4 times. And once you see that, you would move to a different ad that tells you a little bit more about the product. And once we figure that you're already aware of it and we're moving to engagement, then you'll go deeper, explaining more about the product. And you might get a video ad, you might get a banner ad, you may see an outdoor sign, a whole bunch of things along that line. And then eventually, once we figure that you're ready, it's about call to actions. Maybe a discount coupon, maybe a specific product, trying to drive you to a specific landing page on a site and get you to convert.
So from your client's perspective, they're mostly enterprise clients, so big firms that are coming to you, is that right?
I think that we have a mix. So illumin, which is the new product we launched, it launched 2 years ago, but about 6 months ago, we started focusing on the self-serve part. This is where we are selling more predictable type of revenue. It's usually long-term contracts that we sell to the user, and they're using it themselves. So we're not executing for them. And that seems to resonate with the mid-size agencies, so the ones that have a budget so between $10 to $20 million a year in advertising spend. And they take it in-house, and they serve their clients using the illumin tool.
Oh, okay. That's the self-serve component.
That's the self-serve. And on the managed service, which is still the bulk of our business, but it's changing very rapidly, it's a lot of it is the bigger Fortune 500 companies.
So being self-serve, is this cheaper? It's more affordable for companies to use?
So we make margins on the media that's bought on our system. When it's managed, people would pay a lot higher margin than if it's self-serve, because they use it on their own, so the margin is lower. They save a lot of money on it. They also have full control of the whole journey as well.
Are you seeing people or companies trading I don't want to say trading down because I'm not judging the product, but in terms of the cost side of things, maybe trading from a more managed service to a self-serve service in this economic environment we're in, where we've heard CEOs talk about this being an advertising recession?
I think there's a few elements to that. Number one, I would say definitely people are more conscious about the ROI. So if they can have a proven ROI, then they're more likely to spend, and especially if they have full transparency and they have the ability to stop at any time. So I think that's one that would move people from other sorts of advertising to the programmatic space, because you can see your ROI in real time. So that's one. Number two, yes, if you move to self-serve, you're going to save money on the media that you buy. Therefore, you can spend more money on the media with the same budgets, getting a better ROI. Or you can spend less and get the same ROI. So that's number two. And number three, if you can run your campaign more efficiently as a journey, and you have a tool like Illumin, which is the only one in the market that can do that, that gives you the ability to control the entire journey automation or journey advertising, and you can measure everything along the way. So.
Now, I wonder, just in this particular time when there are challenges with advertising spend, yeah. How you sort of see things working out in the next year or so. We were reading an analyst note from TD. They had downgraded your stock to a hold last week, but said that they thought that Acuity isn't immune to industry-wide impacts when it comes to advertising. I believe you think otherwise, but I wonder if you could elaborate and how you see the next little while playing out for your company.
I don't think we're immune, but I do think because we have a new product that is changing the world of advertising, then we have something new and very exciting. So the size of the market is still huge. I think programmatic is over 200 billion size of market by itself. And for us, it's not about the fact that it used to grow 20, 25% a year. So maybe the growth is slowing down. Maybe it's even zero. I don't know what the current growth is. But we're taking current market share because we're going after customers who are using programmatic today and showing them something different. And they're moving to us. So that's why we're still seeing growth. And we're very excited because we're seeing how we're signing in new customers all the time on a regular basis. And what's different than the managed that we used to do before, which is short-term contracts, it's all about the leads that turns into demos. Once we show the product, then it's the conversion into contracts, and then it's the activation on the media side.